Stocks go up, stocks go down. And if you don't know why, every red day could feel like a complete disaster. But here's the truth. Red doesn't always mean something is wrong. So I need you not to panic and don't let anyone ever trick you out of your position just because you see a few red days. I'm the darling of Wall Street, and today I'm going to show you why stock prices actually move. Okay, but before we get started, please like and subscribe and share this out with a friend who's interested in learning about investing. And as always, I'm not a financial advisor. This is not financial advice. You have to do your own research before making any investment decision. Okay? So let's talk about taking a trip to Paris, one of my favorite things to do. So imagine you're booking a flight to Paris during Fashion Week. Same airline, same seat, same plane, except why is it 3 times more than it usually is? Sometimes 4 times more. Because everyone wants to be there. It's Fashion Week. Designers want to be there. Buyers want to be there. Celebrities want to be there. Photographers want to be there. The press wants to be there. Tourists want to be there. Everybody's trying to get to Paris. So the demand goes through the roof, right? Hotels become more expensive. Hotels, oh Lord, they're crazy during Fashion Week. Flights become more expensive. Everyone's going crazy. But here's the important part that I need you to understand. The stock market does the same thing. So months before Fashion Week even happens, nothing has even happened yet. The prices are insane because it's expected that there's going to be a huge demand. Now compare that same exact thing to the middle of February when there's no Fashion Week. No big events going on. Nothing's going on. It's freezing cold outside. Same seat, same airline, same plane. Guess what? Same destination. The only thing that's changed is how many people want to go. That's the same thing in the stock market. That's how stock prices work. They work the same exact way. It's not earned. It's simply the price buyers and sellers agree on at that moment based on what they believe the future of that stock looks like. Here's something I had to learn, and we're going to talk about earnings and all that, but here's something I learned the hard way. Sometimes the news is already priced in. Think about Paris again. The hotel is expensive months before Fashion Week because everyone knows, and that hotel knows, that people are coming. So they're already going to price that month very high, right? It's already built in. The stock market does the same exact thing. Investors often buy before the good news even arrives because they're expecting it to happen. So by the time the news comes, it's finally announced, they already priced it in. And it's already reflecting the price of the stock. And that's why an amazing company can report amazing earnings and the stock actually falls. Think about that. At first you think that don't even make no sense. Oh, yes, it does. And it happens all the time because everyone was already expecting great earnings, right? Many investors bought before the announcement. And then once the news became official, some investors decided to lock in their profits, right? They took out their profits. So can the stock still go up after earnings? Absolutely. Can it jump during the earnings and then fall the very next day, even lower than where it started before the earnings? Absolutely. And that's why you can't simply react to headlines, okay? Because by the time you've read the news, the market is usually already reacted. And you got it. And we're going to get to earnings calls. But nobody told me that when I first started investing. So that's why I'm telling you, I had to learn that one the hard way, right? So now let's go just a little deeper. A stock doesn't only move because of news, good news or bad news. There's so many moving parts, right? There's so many reasons why the prices change. Sometimes investors are simply anticipating something good in the future. Sometimes the company reports earnings, right? They report great earnings or bad earnings, right? Sometimes people take profits after a big run. Nothing is wrong with the company. They're just cashing in, right? They're taking out their profits. Sometimes the company and could report incredible earnings and the money starts flowing into an entire sector. Your stock could go up even if that's not If another company reports earnings in the same sector, it could affect your stock. And that could happen even if it reports bad earnings or gets bad news. If it's the same sector, right? It could go either way. So I need you to be mindful that if another company disappoints, investors may sell the entire sector, including a stock that had nothing to do with it. They just caught the stray bullet. And sometimes the entire market moves together, right? And things change and things, interest rates, inflation, the economy changes. Money flows in, money flows out. You have to understand the environment that you're in. Your stock may simply be moving with the rest of the market. And remember this, right? A moving stock price doesn't always mean the company changed. Sometimes, again, it's just profit taking. A big whale could come in and sell their shares. Sometimes it's just anticipation. Sometimes it's another company's news. Sometimes it's the entire sector. Hear me. And sometimes it's simply millions of investors just changing their mind. Okay? So let's move on to Wall Street Wednesday's word of the day. Today's word is portfolio. Now, portfolio is everything you own to help build wealth gathered into one place. I need you to have a portfolio, and it can include your stocks, ETFs, bonds, a little bit of cash, real estate, and much more. But I need you to have yourself a portfolio. And today we're focusing on stocks because that's where many beginners start. Maybe you've already bought your first stock and your first investment. And if you did, yay! Congratulations. I'm happy for you and I'm proud of you. Now you officially have a portfolio. And if you haven't yet, that's okay. Okay? Because that brings me to the next thing, which is this week's Darling Dollar Move. Hear me. This week's Darling Dollar Move is simple. Grow your portfolio or build one and get one. If you've never invested before, buy your first stock. Buy your first ETF, even if it's only one share or even if it's a fraction of a share, right? Because if you already own investments, that's great. Add to them. Your goal this week isn't to get rich overnight. Your goal is to build a habit. Okay? That's what I want for you. Build a habit. Get that portfolio going. Let's go. All right? Here's the bottom line, darling. The price changed, but what you own didn't. Markets will move. Headlines will come and go, right? We all know that. Some days your portfolio will be green. Some days it will be red. But if you understand why the prices move, you'll be far less likely to panic every time you see a red day. I'm excited to keep walking through the streets of Wall Street with you, one episode at a time. Hear me, I'm the darling of Wall Street. Please like and subscribe and share this with someone who's ready to start investing. And remember, please remember, you do not have to be rich to start investing. You just have to start. I'll see you next Wednesday. Love you guys. Bye.